Hey, it's Jay Tolliver, now with Union Home Mortgage. I'm super happy to be here. I'm here today with a little bit of perspective. I got into this industry 25 years ago this past August. 25 years. It's been a nice little ride. And a lot has changed in this business. I remember taking applications and doing disclosures by hand, literally writing out a good faith estimate, giving it to a client on triplicate paper so that they could keep their copy and I could keep my copy. It was very, very different times at the beginning. Interest rates have also been very different. When I got into this industry, very early on, there was a little bit of a refi boom, and rates had dropped down to very, very low levels from what clients were used to. In fact, I remember locking a client in at 6.875. He was beside himself with joy. And I remember the words that came out of his mouth. This is free money. I'm getting an interest rate below 7%. Put that in perspective to today. We've come through a period of history with some of the lowest interest rates, probably the lowest interest rates we've ever seen in the United States. So low that I didn't even think mathematically they could get there, and they couldn't. But the government artificially pushed rates lower to spur on the economy during a pandemic. Unprecedented situation. And now, how do they thank us for all of that help? It's with inflation. Inflation's a big problem. That's what's pushing interest rates up. So this week has been a rough week as far as interest rates go. We've seen new multi-year highs. You have to go back to like 2007 to see interest rates like we've seen this week. But put it all in perspective. Think about interest rates that are double digits. We're not just talking 10, not the baseline double digits. We're talking 17, 18, 19% for a mortgage. And we're talking about a period of time in the late 70s, early 80s, where there was a very short period of time where housing prices doubled. So it's not that, hey, well, the houses were so much cheaper back then. There was a period of time where rates were hitting those ultra highs that home prices were also increasing very, very much. Sound familiar? Sounds like today. We're going to get through this market. We're going to see better days ahead. So if you're a first-time buyer, there are actually some really good incentives for pricing and products right now for first-time buyers. And you can actually get a house under contract because these sellers that are buyers that have all this equity in their house that they can just throw at the new house aren't there as much right now to bid you out of that house. So first-time buyers, this is your wake-up call. Get out there, find a house. The rates will be what they'll be today. When they come down, marry the house, date the rate. Go find the right house to call home. We'll take care of the interest rate later, get you into some savings, make that payment more manageable. But go get the house, because when rates drop down, it's going to be back to what it was in 2020. There's going to be 30 offers on a house in 24 hours. There's going to be all these buyers with a lot of equity sitting there that are going to be your competition again. So there's a lot of great dynamics for first-time buyers right now. Go get it. Better days ahead. Just a little bit of perspective. I hope it helps somebody. Thanks.